In today's video, we're going to talk about hey, this has been a rough month for the stock market. Right now, my overall investment portfolio is down over $30,000. We're going to talk about it. I'm going to show you a little bit of the numbers. But more importantly, I'm going to tell y'all what I plan to do with my strategy. Considering that the market is kind of red, what are we doing over here at the household of the debt-free dad to make sure that things don't get too crazy? Let's go ahead and rap about it. As always, got to shout out the disclaimer. I'm a licensed attorney, but I'm not your attorney. So if you're looking for financial or legal advice, get out of here. Go over there. Go click on one of them videos over there. Go somewhere else if you're looking for anything professional. This is just my personal opinion, and I'm letting y'all know what's going on in the household of the debt-free dad. Now, let's talk about it. January is over. We're in February, and we're going to talk a little bit about just how the market has performed as a whole. If any of you are like me and y'all investing, because I know y'all are, whatever you had in December is probably down. I don't care if it's ETFs, single stocks, cryptocurrency, with the exception of property, and that's some property in some location, with the exception of property, every investment you have is probably down unless you got property or you got like a big ass gold block that you just storing in your basement somewhere. That probably went up in value, but that's a whole nother story for a whole nother day that we'll talk about in a whole nother conversation. So let's go ahead and take a look at the numbers. Okay, we're going to start out by looking at one investment account that I have. And I actually probably think I told y'all and actually did a video before about this account, just kind of how it grows. It's an investment plan that I had with an old employer. I haven't invested in this account since the summer of 2019, since I was unabruptly shown the door. Check out the link above for more on that. Now, again, when I started this account out, the last thing that I had in this account in 2019 when I was contributing to this account was about $74,000. Haven't contributed anything since the summer of 2019. I just leave it where it is. It's low fees. I let the compound and interest do its thing, and we're gonna take a look to see where things at. Now, that account that I haven't contributed anything to since the summer of 2019, at the end of December, it was $98,663.60, up 18.3% on the year. It was actually probably up a little bit higher than that, but this is just what it was when I took the screenshot, which was a couple of days before the end of 2021. So I think it ended up closing out at like 20%. But essentially, this is around where it was at the end of the calendar year. Let's fast forward, take a look to where it is currently. All right, currently this account sits at $91,473.51. So you can see that this account is down 7.1%. It is what it is. That's just kind of what the market has been doing. And so let's just go ahead and talk about it, rap about it. Let's talk about what's down. Now, to figure out how much my investment account has decreased in the month of January, I just pretty much use estimates. Take a look at the video that's linked above for our net worth, what our total portfolio value was at the end of December 2021. In short, the short and quick of it, we were at $392,000 and some change in total investments into any type of investment account. So this includes 401ks, this includes individual investment accounts, this includes IRAs, this includes crypto. It includes everything. The only thing we ever include in anything is what we're saving for our kids' college. That's like not really our money. So what's the point of including it? But that's a whole nother story. So we were talking about $392,000 that were in our total investment accounts at the end of the year. I just took a quick snapshot at one investment account I had and said that was down 7%. So I said, I'm just going to estimate that, across the board, my holdings are probably down 7 to 8%. And so essentially what we did, we knew that at the end of the year, we had 392,000 in total investments. Across the board, for the most part, we're down about 8% in the month of January. 8% of $392,000 is $31,390 or $31,320, something like that. I knew the number, but I forgot it. But essentially, we're down $31,000. So, like I said, everybody is down. Now, here's the important part. I know y'all asking, damn, well, what you gonna do to stop the bleeding? Here's the answer in short. You don't even got to go to the end of the video, but the answer in short is absolutely nothing. We are going to do absolutely nothing and not change anything. It's funny because when things don't work out, how many things have we held on to that we shouldn't have held on to that aren't working out? I talk about relationship, friendships, cars, all these things we hold on to that we probably shouldn't hold on to. But as soon as your investment portfolio go down, people want to get shook and sell. Nah, if you want to stay in that, you want to have that relationship with that crazy ass friend who ain't really worth nothing. You want to hold on to that piece of crap car that just you keep spending more money. You hold on to all that stuff. Hold on to your investments. We aren't changing an absolute thing. At one point, I did have a thought about, maybe I should move some of this money, put it into something that's stable with really no risk. Then when the market turned green, I'll throw it back in and just ride the wave up. But I don't have time to do that. I think the best way to invest, because we can't guess when is the bottom or when is the top. I don't even really want to look at my investments that hard. It's just too difficult to do. And so what we do is dollar cost average. We've been dollar cost averaging. It's gotten us to this point, so why change it? If it's not broke, don't fix it. Why would I try to do something new if what I've been doing has gotten me to this point? Am I behind some? Yeah, I'm probably behind some, but it's not because of my investment strategy. It was because of personal dumbass decisions that I made. So we're going to stick to the same investment strategy, dollar cost average. And essentially, dollar cost average means you put your investments on autopilot. I'm going to invest in my company's 401k. I'm going to invest in my IRA. I'm going to invest in this ETF. I'm going to invest the same amount every month, no matter what. I don't really care what the market is doing. I don't care if the market is up. I don't care if the market is down. I'm going to just keep investing every Friday, every other Friday. I'm going to keep investing that $100, that $200, that $500 a month. If you keep investing the same amount every time, every month, consistently, you're going to catch some days where the market is high. You're going to catch some days where the market is red. Ultimately, it'll end up balancing out. So if you're dollar cost averaging, if you're taking the same approach as I am, it's nothing to do. Now, again, if I was, 62 and I wanted to retire at 65, then I would probably do something a little bit different because I would want to preserve all the capital that I have. I wouldn't want to risk losing it. So I probably would take a big portion of it and put it in something less risky. But if you got 20, 25 years to still invest and make your money work for you, it ain't no big deal to take it out. Just let it ride. Keep doing what you're doing. If you buying when the market is red, hey, you catching a sale. If you buying when the market is high, don't worry about it. Don't sweat it. Just keep putting it in. So that's our game plan. That's what we are doing. We really don't give a you know what about the market being red. On average, if there is an actual bear market, meaning the market is just going to be red, on average, it only lasts anywhere from like 16 to 18 months, where the average bull market, where the market runs up, lasts anywhere between 7 and 9 years. So statistically, the numbers and the odds are in your favor if you keep investing the same amount. So that's what we're going to keep doing. I appreciate y'all tuning into this video. Hey, check out the videos on the screen and maybe some videos that you like related to financial education or videos following my family's financial freedom journey. Y'all take care. Be blessed. Peace.